Good morning. It's Thursday, October 17th, about 6 a.m. Central Time. So overnight, the precious metals, they trade mixed. However, I don't think that's going to last very long because of the fact we've got a lot of economic data coming out. Dollar index a bit weaker. I think that precious metals here are probably going to rally a bit here this morning. So this comes after Wednesday's failed breakout in the precious metals. So gold fell short of a new all-time high and silver fell short of its contract highs because of the fact that we saw profit taking around the edges in the gold market. Now remember, I tell you, define your edges in these markets. A lot of times you can look at contract lows, contract highs, periods of consolidation. What was that consolidation range in the gold market? 2650 on up to 2700. Markets poked a little bit above there. We saw those who were most likely shorts having their stops hit, and we also saw some profit taken come into place. So it's a new day, another high probability that gold hits a new all-time high. How do we measure that? Well, we have a price volume volatility model, and if you look at the upside probable tactical range, number one, 2706 followed by 2722. Silver is going to be 3233 as your first target, and then also on the platinum market, 1019. So if you like to receive any of these things, let me know because I could send them out to you. So looking at the overnight price action here, December gold up $11.50, 2702.70. So not much to say that we're going to go up to all-time highs. We're only a couple bucks away here. So looking at that gold market, 2704.20 was the overnight high, 2688 was the low. So another higher high in that gold market, and we'll see here if we got that upside price momentum to break out to the upside. So December silver down just a few cents here, 31.96. I believe we'll recapture that 32 handle, and you got a range of about 60 cents in silver, 31.54 being the support level. If you get the metals edge, 3150-ish is going to be your key level of support on that market. Copper futures down 4 cents here, down about 1%. So that's your weakest metal, and that's at 432. And then you got platinum up $12 at 1014. That's your strongest metal here, and it's nice to see that thing here back above the 1,000 mark. So UBS put out a report on platinum. They don't believe that it has a much sustainable rally beyond the 1100 because of the fact that there's some serious above ground inventories that need to be chewed through. So we'll have to watch automotive production, things like that. We'll have to watch Eskom and see if they have power outages in South Africa, which takes off some of that excess mine production, and that's how you get platinum futures moving a bit higher. So what about the overnight volatility in the markets, and specifically the copper market? Because copper looked great yesterday, and then it looked like we were going to recover here with silver and everything else. Why are we down 1%? So it's because of the fact you look at the CSI, that's a Chinese real estate index. It had gained 5% on Wednesday and fell Thursday here last night, fell about 8%. So Chinese property stocks dropped nearly 8% after the housing ministry briefing. It was most of the Asia Pacific markets, they had all declined as well. So looking at some things coming out here, and it's going to be a volatile session, so you're probably going to have to watch Bloomberg if you want to check out the ECB's rate decision. So the ECB, they're going to announce their monetary policy decision. They're widely expected to cut their key short-term interest rates by about 1/4 percentage point to 3.25. So this would be the third interest rate cut since June. What's that do? Gets them closer to the terminal rate. That's going to be the bottom on the euro currency here, where the dollar index, I think we've got to go much farther in time to get to that level. So that's where you'll see some of the bottoming action take place in that euro currency here, and some of the topping area in the dollar index. So what do we got coming out in the US? We got a ton of things that are going to move the markets as well. We're going to have US retail sales. We're going to have jobless claims. We're going to have industrial production. So getting to the jobless claims, that's going to be the one that I'm watching here. 241,000 jobs are expected versus 258,000 last week. What happened in the last couple weeks? A bunch of hurricanes came through the Gulf of Mexico here. So that type of action had fueled the fire below those jobless claims numbers, pushing them up a bit higher. Now, that's not to say that companies like Boeing cutting 10% of their global workforce, and a lot, of other companies out there also cutting workforce as well, especially in construction, things like that are just not doing well in this particular environment. So we're going to want to watch that number. Anything below 225, I think, is a little bit alarming for the metals. You'll see probably the dollar index rally back up. You'll see that Fed watch tool shift a bit. So getting to the Fed watch tool, it's going to be a 93.6% chance that the Fed cuts 25 basis points, 6.4% chance that they cut or that they leave interest rates alone. So these numbers here today could really start to cement the interest rate cut expectations. One other thing we have coming out today, which was delayed, is the crude oil inventory data. Many of you are trading crude oil surrounding the Middle East tensions and things like that, which have died down and zapped out a lot of the premium. A lot of people are bargain hunters looking for 65 on the floor on crude oil, 70 here in this range here. They're going to start to scale in going into the 2025 contract. Now, if you look at the inventory expectations, build of 1.8 million barrels, what they're looking for. Last week was 5.8. Last week's bearish build on crude oil had no real effect on crude oil prices and actually rallied throughout the day. And this comes as Middle East tensions were dying down last week at that time. It was because of the product drawdowns that we saw. So if you trade crude oil, watch the gas, watch the distillate numbers that come out. Now, I would just, a gambling man would think that, these generators, they use a heck of a lot of gasoline to fuel, the recovery and everything else of this. So I would expect to see tighter gasoline inventories, and that's going to help support and cushion the blow on the energy markets as well. So getting into, this is what I get calls all the time about, election positioning. I don't like to get into politics on here. Many of you guys do know my political stance, though. So I looked and I backtested against their policy agendas, the cross-asset classes, and I looked at different sector styles. So under Trump, do not yell at me about any of this stuff. I don't want to hear it. So this is just what I see here on the surface and the way I see positioning take place. So for Trump, banks, because of decreased regulations and things like that. Defense spending, remember he wanted to have the strongest military and he wanted to boost military spending. So expect to see defense do it well, and also energy stocks. Remember, drill. That's him. So you go to Harris on the other hand, clean energy. That could help boost your copper. That could help boost your silver as well. So clean energy stocks, most likely solar, things like that, would take off. Managed care and also technology. Now, what are the markets pricing in? Well, if you look at the betting markets, they're pricing in a Trump victory at the moment. You can also see that Bitcoin futures. Remember, he was at that conference in Nashville. We saw Bitcoin futures rally dramatically, break out to the upside. We're also seeing, remember, he has a hard stance on China. Many of you that have been trading with us on the soybean market had put options, still either maintained or took off at a profit on your put options in the soybean market because he's got a hard stance on China. They're one of the number one importers of soybeans. Now looking at the US dollar, this is where things get interesting because the dollar's been rallying and gold's been rallying. Typically, they have a 54%. Well, typically, they have a much higher inverse correlation. Now it's only about a 54%. I would anticipate after the last few days trading that correlation number continues to come down here. The dollar index has been quite strong, however, will be affected by that ECB rate decision. So we'll see if maybe they come with a small hawkish spin on it, and that could get the dollar index going lower, and that could get some of our metals higher here. So what about the stock market? That's the other one that people keep talking about. So historically, we do have a Santa Claus rally in the stock market for November and December. Historically, those are two of the strongest months. However, if you backtest going against the election taking place, regardless of which candidate wins, we've seen historically a much stronger November and December. Why is that? A lot of people will buy put options ahead of it, regardless of which candidate's going to win. It's just their personal feelings. And then because of the stimulative, accommodative policy that each candidate has, Kamala wants to spend, Trump wants tax cuts, we'll see that other party unwind and then boost prices higher. The only wild card that I believe that could happen with a Kamala victory is she does want to raise those capital gains taxes, so you might see gains in the market but not at the robust strength that we would normally see because of that rhetoric. Now, what about the gold market? I think both candidates pose different types of risks for the economy. However, they're both supportive of the economy, and I think that that's where you get things going back to the upside here, and we continue to go up because of the fact that the Federal Reserve will continue on this policy cut stance. Now getting into a couple things, technicals, raise your stops on that gold market because of the fact we look like we could be breaking out to the upside, which will mean that old resistance, 2,700, old all-time highs will be new support levels there. So 2650 I think is the level we don't want to see gold futures drop below. The silver market trying to inch its way up needs to break out over $32. Again, if we do get any fuel to the fire on the upside, 32.33 I think would be your first upside, 32.77 and then 33.21. Those are your levels. Copper market, again, consolidating around two key moving average, 50 and 200. You need to not see a break below 425. That would be pretty bad for the copper market. We're probably going to trend a lot lower. We'll have to trim positions. 453 on the upside sends that copper market probably right back up to 460, 480, and beyond here. So you got any questions, longer video, give me a call, 312-858-7303. Remember, futures option trading involves risk of loss, may not be suitable to all investors. Good luck, go get them.